Good morning, traders. Happy Thursday. It is the 3rd of March, 2022. It's 8 a.m. Chicago time for episode number 2183. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we're having a surge right now on news event. Oil taking a hit, falling from $115 to now crossing below $108, a drop of about $7 this morning. The news hasn't hit the wires yet, but it came in through Squawk about Iran potentially providing um, access to its oil or increasing its flow to the planet, or being allowed to increase its flow of oil to the planet. It's not coming out in text, so I can't read it. So I'm just paraphrasing what I heard here. Yeah, so that's what that news is. If you look at crude, it is definitely taking a nosedive. Overall, the market was balanced. It was a very slow session, very quiet session, and now we're breaking higher. Europe is still not in the positive here. Just basically unchanged. The DAX down less than half a rotation, and the Euro stocks up just one tick. The Nasdaq really taking off on this run. The Nasdaq was trading at 14,226 and now trading at 14,350. So a decent sized move in the Nasdaq, and same in the S&P. The S&P was trading on this news at 4384 ish, and now trading at 4415, 4418 is the high. So that's where we stand. The market was mixed and now slightly risk on. Pre-market, we had earnings from Kroger, which is a large grocery chain, Best Buy Retail, TD Bank is banking, Canadian Natural Resources, another big one. After the market, we get Costco, Broadcom, Marvell Tech, and Algonquin, actually, Power. The main headline, or the main news risk, is the conflict there between Ukraine and Russia. At this point, there are talks taking place in Belarus. I don't know if I mentioned it in yesterday's Trader Bite, but I did mention it in the Convergent Trading Head Trader channel, stating that any ceasefire as a result of this conflict is likely to push us about 100 to 120 points higher in the S&P. We're likely to see ourselves, at the time we were down at 44.30 or so when I said this, and I was looking for 44.50 as the target, which is the 200-day moving average at 44.47, along with the 44.50 mid-century figure and a low volume node in that area. So that's where we stand. Russian forces, however, keep advancing towards Kyiv. Energies were higher this morning and have now taken a dive as a result of this news. Again, headline risk continues. There's a lot of headline risk here. In terms of the calendar, we're looking for market services PMI final for February at 9:45 Eastern. This morning, we did get the unemployment rate out of the Eurozone, came in at 6.8% versus 6.9%, so better. Consumer confidence came out of Japan at 35.3 versus 36 forecast. And then we had initial claims, which were better than expected in the U.S., non-farm productivity, which was in line in the U.S., and again, we're getting market services PMI and composite PMI at 945. We get ISM non-manufacturing at 10. We get Feds Powell's testimony. Not expecting any surprises here, although he did say some things that caused the market to push higher. We're getting U.S. factory orders at 10 as well. And at 6 p.m., Feds Williams unemployment rate out of Japan at 6:30 p.m. Eastern U.S. time. Turning our attention to the ES We were balanced. We now have a B-shaped profile, but it's not really in the way that B-shaped profiles tend to be built. B-shaped profiles tend to run down from the open and then consolidate at the low, creating a B, creating consolidation or high volume node at the low with a thin profile at the top. What this is it's balance that's breaking into imbalance. This is an initiative. This is initiative buying behavior. So we're opening at a gap this morning in the S&P. The volume was quite low until I started the broadcast. It was about 194,000 about 5 minutes before 8 a.m. my time, meaning 10 minutes ago. Now it's at 234. The inventory is balanced. The range is 51.75, much smaller than we've had for the last couple of days. Point of control 43.75. Yesterday's close at 43.81.5, and so is settlement. So there's a fair amount of support underneath us. Again, we're opening in a gap. Gap rules apply today. Crypto's sideways again. Again, I'm still bearish here. The last surge was news-based. I'm expecting that we're likely to see the SOC in crypto back in the $36,000 or $38,000 per coin range in Bitcoin. We'll see how that goes. Yesterday, just a brief look at what was expected. Yesterday, I outlined some plans. I was looking for it to push to 43.43, fail, and then continue this one-time framing down, fail, and push into the 42.34, potentially 42.17 below, which is major support. That was scenario one. Scenario two ended up playing out. Scenario two was looking for a test lower, a push up, test lower, and then a push to 43.80 with 44.02 as the key target. 44.02 is the key target. Yesterday ended up pushing to 43.99. So we ended up with scenario two, a reversal of a reversal. Here's what things looked like yesterday. Here we go. So here's what we've got. We had what looked like scenario one, a push higher, a slightly lower high by a couple ticks, and an impulse down. And so now we're looking to the short side, looking for this thing to extend down as indicated. In this case, we would be targeting 42.71 initially for the bounce, and then look for a push lower. That's what this was expected to look like. And instead, we got a nice little, nice big stop out here, a big push reversal in the other direction. And remember, this is when Powell was speaking right in here. We pushed in the other direction, and it's actually set up a pretty decent long into the 43.50 region. We put in the IB at 54. We breached the IB high. Again, the mid and VWAP have been quite solid. Those setups have been quite solid lately. You just have to kind of sit through a lot of noise and a lot, close the dome, close the depth of market. Do not look at the order book when you trade. And then we ended up breaking right through the prior day's high. So this is a one-time framing, was breached on Tuesday, was breached down on Tuesday, and it looked like the market was reversing down, and that's why scenario one was looking for us to push down. The trend is your friend, as they say. They don't tell you which trend to follow. But we breached the prior high, so now the one-time framing down is again unable to take place. We breach, we fall back through, and this actually fell a lot lower than expected. This was a stop out right here. There's some support. It pushed through the high, and it was a stop on the balance of this trade. There was a stop on the balance of this trade as it did not continue to hold this 43.65 area or so. And then it comes back through, pulls up through the high, and sets up another long for a push with the balance coming back to scratch yet again. So pretty noisy trade here. Multi-distribution profile. We have a thin area, a minor distribution, and then another distribution down below. This was a price discovery. There was active price discovery yesterday. This was a pretty solid push. You can see that we separated from the RTH and full session VWAPs for most of the session. We did not. We really got well ahead of the volume weighted price. Pretty important to observe. Looking at what happened in the overnight session. So this is our profile for the overnight. This is the orange, like it says up here. Orange profiles full session, blue profiles RTH only. So this is yesterday's session, and you could see the multi-distribution kind of profile yesterday. Very active push, and then we open up, push lower, and consolidate with a point of control overnight that's a little bit lower than yesterday's point of control, 43.80 versus 43.75 point of control, and then we finally squeeze through on this news event this morning, and we are now above the 43.99. Remember, the 44.02 was our big target from 2 days ago and was mentioned yesterday, 44.02, and we're above that. Okay. Yesterday, despite all the buying, check this out. Delta selling. Just, we don't know why people sell or buy. We don't. I'm sure some talking head on CNBC will have a nicely gift-wrapped explanation for what's going on. But when price is moving up while Delta is moving lower, it implies a potential for one or two things. One, it shows that potentially the sellers are backing off. There is no liquidity on the sell side. Those offers are being pulled and they're not being lifted. So the market's moving up on thin air in terms of volume. Or it can imply heavy hedging, which is where I think we are. Again, we have massive risk overhangs. They're selling every pop that we're getting up into 44.85. And to me, this looks like hedging. And what's happening is if you had to hedge a portfolio that was, $50 million, and that's a very, very small portfolio, by the way, in current standards, if you had to hedge that, the best place to do that is in the S&P if that portfolio tracks the SPY. The best place to do that is in the S&P futures. It's a very efficient way to do so, and it's a very, very direct way to do so without having to deal with option gamma or option convexity, delta hedging, all that stuff. Right, without having to give up that premium and so on and so forth in a high volatility environment. So futures become a lot more attractive because you only have to put up 11 grand to hold 220,000 or 240,000 worth of a portfolio. And that's what this looks like to me. It looks like if you had a whole lot to hedge, what you would do is you would sell into strength. You would sell into strength. And what we see here is strength. Okay. And you're hitting the bid. And I saw that on the tape. I would see 700 lots sold, 500 lots sold, 700, another 6, another 3, another 500. On the way up, every new high gets a big dot on my Edge Pro X platform. And I could see in the MBO data that the block sizes in the depth, and the depth goes 1,000 up, 1,000 down, or whatever it is, you can see that those blocks move up and then they end up hitting the bid anyway. So they're trying to get the bid to come up, and they're trying to hit the bid on the way up. So this delta, negative delta, seems like hedging to me. So this move up is likely to travel a ways and then find itself turning over. Again, the range here that we've been trading is really, we're trading a large bounce zone of 4,200 to 4,600. Period. So let's keep the big picture in mind here and remember that we are still stuck in this range, in this big range right here. That's all we've done. We've been kind of going back and forth, and we talked about 43 quite a bit. And then on the upside, which is probably not easily attainable, is 4680. 4680. And here we are right now. We are pushing against the 200 or the 20 SMA, and we are below the 200. And to me, this is gonna entice some more. There's likely to be a lot of splashing of volume, a lot of sweeping and things like that. But we are, we've spiked down. This was an excess low right here. This is a very clear excess low. You could see the volume tapering off on the profile. Excess low, back to balance. We've spent several days on top of the 43, which is expected. This is the tall grass area. And now we're starting to push higher. But even so, we have quite a bit to work through here, especially in the 4,500 zone. You can see these two points of control right here. You can see this prominent volume right here, prominent HVN. So to me, even if it clears this area, it has a big obstacle at 44.20. And then once it gets through that into the LVN, now it has to deal with the 4,500. So 44.50 is likely to give us some trouble here if we push into it today. So just step back for a minute. Don't be too myopic, and make sure that you're looking at the bigger picture. All we're doing is filling in these high volume areas. So let's not get too crazy about, Powell. I think I read somewhere like, Powell stopped the correction. What a stupid headline. I mean, really, just no idea what they're writing about. So that's where that stands. Let's take a look at what's expected for today. Just preparing the chart here. Okay, the key levels for today on the price map, above and below. Hang on, it does this. These are the key areas. Above, we have the 44.45 or so. 44, that's key resistance up here. The over-under line was just taken out at 43.85. 43.85. The magnet remains the 43.43, so 43 right here. And this is 85. And above, this is the 44.45. Okay, and then support, key support has shifted up to 42.78. Oops, 42.78. Okay, and so we are above the over-under line. We're leaning bullish here. We are above the magnet. We're initiative away from the magnet. We're pushing away from the magnet. So this morning, the expectation is an open auction with a minor pullback. We're looking for the market to revert back a little bit. As mentioned earlier from our CT pre-market summary sheet, the inventory is balanced, so I'm not looking for too much in terms of reversion. I do look for this low volume node to be tested, but I expect this to turn up and start working ourselves into this key resistance. And then I'm looking for us to balance out here before trying again to push. I'm not expecting it to get too far above the 44.45. This is an area that is likely to be well thought out. The target above there is 44.65. That's a high volume node there, and that's scenario 1. The responsive scenario, in case we are still imbalanced, is we open up, we push higher, we run into thin air, and then we end up with an impulse down like we saw yesterday. An impulse down that brings us back, and then we break through, and then we get our overnight point of control, get our settlement stat, overnight point of control stat, and then we are back in this chop zone all the way down to 59. Okay, so we're looking in this case from about 44.30 down to 44.59, giving us 43.59, giving us our day's range. That'll be scenario 2. Tomorrow's non-farm payrolls. Tomorrow's the first Friday of the month. It's non-farm payrolls. We may see some positioning into that number by the close, but expect a pretty pushy, we're out of balance, expect a pretty pushy trade this morning. I'm expecting it to be somewhat violent, so to speak, somewhat whipsawy. We are out of balance on initiative buying here on news. This isn't consolidation breakout, this is news based. So the scenario 1 and scenario 2 are on equal footing, have an equal probability. It's very possible for it to push back to the news event, which brings us back into the 43.80 area. So that would be scenario 2. If I'm confusing the heck out of you, just hang in there, listen every day, and you'll start to see a method to the madness. I'm following the exact same process every single day. Okay, good luck and keep your risk tight. Take care.